Hello, everyone. Retire on dividends here. Starting a little early. I appreciate all of you that can attend. I'm here with the one and the only. I was able to locate him, Scott Acheycheck from RecShares. He's the COO. And since many of you, I know you guys love his products, but you don't know him necessarily. So I want to give him a chance, to introduce himself. And then we'll cover some questions from there. Thanks, Scott.
Awesome to be here. So I'm Scott Acheycheck. I joined RecShares back in 2016. Prior to that, I started on Wall Street. I worked my way up from operations positions and then started getting involved in derivatives and options, primarily through structured notes. So if you think about the world of structured notes, you could buy, let's say, a zero coupon bond for, let's say, 80 cents on the dollar. And then the remaining 20 cents that you have invested, you could buy options. So if you think about what you could do with that, you could create your own principal protected note. And that was kind of like my first foray into options. From there, I moved into covering institutions for commodities and derivatives. So that was some of the biggest pension plans in the world, some of the biggest hedge funds in the world, trading gold, commodities, broad-based stuff. While at the same time working with some asset managers on creating new products and providing the hedge for that. Funny story, or kind of a small world story, I guess. I hedged the first commodity ETNs exposure, and that was by Barclays. They had the product DJP. That was launched by this guy by the name of Greg King, who found RecShares. So we basically just stayed in touch over time. And then when he started this company, I joined. I was pretty much done with big bank world and couldn't wait to sink my teeth into creating products for everybody.
Awesome. Thank you. And I understand you have an interesting story of how FEPI started. Did you want to share that?
All right. Yeah. It's a little interesting. For me, it's a little interesting, but people ask me how I came up with the idea for FEPI a lot. Long story short, at the beginning of 2023, I went to a couple ETF conferences, and I really got tired of hearing about JEPI. I'm like, it's okay. It holds structured notes. I mean, historically speaking, people hate ETNs, right? Mm-hmm. And yet this ETF that's taken off holds a bunch of structured notes. It holds notes by Credit Suisse and other places. They're just not the highest credit quality. So I just started trying to figure out a way to create a better product. And on our trading side, our trading product side, we have a Fang and Friends kind of basket. I was like, oh, what if I just start selling vol in the individual names instead of at the index level? I'll probably double or triple the JEPI yield. And those same stocks make up a ton of the S&P already. Let's start looking at that. And I'd like to refer to FEPI as almost like a spite product, just out of pure annoyance with JEPI. And some would say maybe F something else JEPI for how it came about. But it's, I think you got to give them a ton of credit. They were really early in the world of this covered calls. And as soon as all of the volatility started hitting interest rates, the hunt for vol was on. I mean, there's a lot of people that hold long duration bonds, and they got absolutely crushed. I mean, some of the peak to trough numbers on holding longer duration bonds were right up there with .com bust equity pullbacks. So the hunt for yield was on. And at that time, I was just trying to figure out a way to keep the covered call in a traditional sense, like owning the underlying, while trying to figure out how do I get more upside and how do I get, greater yield? So, and, I guess you already know this, and most of your audience probably knows this as well, but just as a quick review, when we look at the world of FEPI and how it differs from, let's say, a JEPI, we own the 15 stocks in the basket. We're not selling vol on the index, right? If you look at, NASDAQ vol, S&P vol, historically it's pretty low, but even vol of a Microsoft or Google historically is higher than that index vol. So now you capture the Tesla vol in the 60s and the NVIDIA vol, wherever that's going to be right now in the 50s, and you sell vol in those individual names. That allows you to do two really cool things, which basically was the premise for this entire product. One, we could strike the calls further out of the money to allow for upside, which some of these traditional covered calls just really struggle with providing upside. And two, because it's more volatile, we're also able to target a higher level of income. So, we've been averaging about 25% really consistently annualized each month. So that's double, triple some of these traditional products while maintaining the integrity of holding the actual underlying.
Yeah, 25%. Every declaration I've checked it's pretty much exactly 25%. So is it always going to be 25% no matter how much more you make, no matter how much less you make necessarily? Is it always going to be that 25% yield?
I think it's safe to say we're targeting it. I mean, I don't want to be in a world where I'm making future prognostications on a product because, obviously it's actively managed, but I could definitely tell you that it sure seems like people appreciate the consistency of having that similar level of distribution every single month.
Yeah. Okay.
And it's fully noticed by us.
Yeah, it's congratulations on this fund, by the way. It's performed very well. It's very popular. I don't know how much YouTube you do, but it's
probably too much.
Yeah. It's because a lot of these high yield funds, the ones that have the higher yields, a lot of people, it's a love hate, right? But you're like in the middle. You're kind of like, you get the love from the high yielders and you get the love from the people that call them, the other high yielders a scam, so you're like right in the middle, and 25% yield, that's although it's considered low nowadays, but that's no joke, right? It craps on like QYLD, right? And you do in the beginning, you were having upside on top of that. It's essentially stable NAV at this point, but 25% with stable NAV is not easy to do. But yeah, congrats on that. And I noticed, so the allocation, is that once a month? Is that twice a month? Because obviously when Tesla can, go super green, right? That's going to be a higher allocation. How often do you do that? Do you do it once a month, or if it goes crazy, you do it earlier?
Yeah. So, the world of ETFs is kind of funny. People appreciate like passive, something you could kind of really like set your clock by. So the benchmark or basis of our index here, of our product here, is an index. It's the Selective Fang and Innovation Index that rebalances on a monthly basis. So it'll snap back to equal weight on a monthly basis.
Nice. Okay. And then, all right, let me pull up a question. Keep up with them. So someone's asking about MSTU. I believe you launched that though, right?
Yes, that was last week. All right. So MSTU. So we have our trading product side, in addition to like more of our covered calls, buy and hold products. So on the trading side, we have a series of ETNs that are under the microsectors brand. That's where we have like 3X Fang, 3X Gold, stuff like that. But those are ETNs. Then we also created in partnership with Tuttle Capital. I don't know if you know Matt Tuttle at all. He was the guy who came out with the short Jim Cramer product and the SARK, the short Kathy Wood product. We collaborated and created a brand called T-Rex, Tuttle and Rec Shares. Yeah. And the whole goal there is to try to provide some better products out there on the single stock side. So despite being almost 2 years late to the single stock ETF party, we were the first ones to figure out how to get 2X done on a number of really cool names like NVIDIA, Tesla, like really high octane names for the trading crowd. And then last week we launched 2X MicroStrategy, which is MSTU, which is what he was asking about. So it's something we're super excited about. It's got an absolute ton of buzz. I think in about a week, we've raised about $80 million on that. I think even more after tonight's close. So it's something we're pretty excited about. And again, we don't want to be in this copycat business that a lot of the ETF world is. If we could do something different or innovative, on the FEPI side, literally traditional baskets, but selling calls and stocks. On the trading side, what code can we crack to be the first ones to do something in 2X or be a first to market on a specific name? It's what we're all about. The last thing you're going to see us do here is launch the S&P 499, the NASDAQ 101. It's just not interesting. It's not fun.
Yeah. No, this is a big fund. This is a popular fund. And, you're the first one to get 2X on it too. So, which people, to the question, they love options, right? They love trading options, especially weekly options. So would you say that obviously the volume has to to peak at a certain level before it goes from monthly to weekly options, on the options chain?
For the ETF itself, yes,
Yeah,
I'm
for
sure
the
we
ETF.
need to pick that up a lot.
Yeah.
Haven't looked into like what exactly that benchmark is, but yeah, the activity would have to pick up significantly. So
Yeah. Okay. Yeah. No. Is it hot? I asked this to other fund managers. 2x is now, I believe, the max, right? You can't go any higher. You can't file for any higher than a
yeah.
2x. Anything in 3x is grandfathered in, and it's untouchable, I guess, right?
Yeah, so basically, I don't know, a couple of years ago, the ETF rule came out, and you'll hear people talk about the ETF rule. So
Yeah.
what that did for the world of levered and inverse investing, prior to that, there was basically a duopoly going on in terms of 3x ETFs, and that was like Direxion and ProShares.
Yeah.
So somehow those guys launched some 3x products, and then all of a sudden the SEC says, no, nobody else can do this. So for a long time, they had a duopoly, and then the ETF rule came in place and says, you know what? Nobody's doing 3x. The most you can do is 2x, and anybody can do it. So it kind of opened up the possibilities for any firm to kind of join the leverage and the inverse world. But also that same rule kind of lightened up the diversification requirements needed to launch an ETF. So that's why you saw the advent of a lot of these single stock ETFs.
Okay, so those 3x, you think they'll be on the market then? Like they can't touch them, right?
The 3x that are already in the marketplace, yeah, they're grandfathered in. Whether it's like a
I love them. I don't want them to go
I don't see it going away.
Yeah, those are good to have, especially on the indexes. I know you answered kind of the 25%. Obviously, AIPI is pretty much the same thing, right? 34% every single month. Is that safe to say that's the target for AIPI?
Yeah, I mean, again, I think people enjoy consistency, and we fully realize that. So we're trying to do everything we can to balance, and also we're trying to balance upside too. When the market goes up, I think one of the worst things that happen with some of these traditional covered call strategies is that they don't go up with it, or it goes up like a fraction, a tenth of whatever 1% goes up. So we're trying to provide that upside. I believe. We did the stats like about a week or two ago. Our average out of the moneyness on our single stocks was like 4.5%, something like that. So that's each month providing that kind of upside. And, traditionally in these, again, traditional covered call strategies, they're either, half a percent out of the money, 1% out of the money. They just don't go that far out of the money to really provide upside. So it's something we're pretty excited about.
Speaking of out of the money, when you guys do your trades, is it all together? I know you don't post your trades on the website. So when do you do them one by one? I know they all typically have the same expiration and everything. Is that all done on the same day? And also follow-up question.
Yeah.
Are you ever thinking about posting your trades when you do them?
We haven't been asked that before. So,
that's why I'm here. See?
For the most part, you'll see us, a couple days before expiration roll to the next month. And that's when you'll see our portfolio change. Now, during the month, our portfolio managers, will get active sometimes as well. Like if a certain premium that we sold, let's say, is down a significant amount, they'll look to buy that back and then sell again to kind of increase that income potential.
Okay. So
as far as posting our trades on a daily basis, haven't seen that yet. I don't know if you see other people doing that, but
yes,
I guess you could see ours, but you have to really scrape last night's data versus today's data, which is probably makes it a little challenging for you. But if you have an example of what other people do, I'm happy to take a look at it.
Oh yeah, no, we funds like YieldMax, Defiance, Roundhill, they all post their intraday trades, and they have daily trades. So I actually analyze YieldMax some of the funds on a daily basis, and I would love to analyze FEPI or AIPI based on the intraday trades. And I know it's probably once a month or, like you said, ad hoc. If they see an opportunity. So I don't know how hard that would be, but yeah, people, believe it or not, are interested in that. So
well, I'll definitely take that as a takeaway.
Okay. Can't go wrong with FEPI, right? See that? The love is there. And they love the t-shirts too.
Nice. Well, we're happy to provide them.
Yeah.
I see.
Yeah.
I see one of the comments asking if this is an original Hunter Biden on my wall. I don't believe that's a Hunter Biden artwork, but it's something that my wife picked out for the office here.
Another MSTU question.
Sure.
So again, you can see that on the screen, right? Just curious.
I do now. Yeah.
Oh, okay. Yeah. The some of these leverage ETFs have a distribution. Do you have any idea if MSTU will?
No, it's tough to forecast that. So, it's not something we're planning on. I know a couple of levered funds out there do have like monthly distributions. I think it's something more on the lines of if the fund has a capital gain at the end of the year, sometimes there's a certain requirement to distribute a portion of it. Our goal is to focus on making sure we're providing 2x leverage on daily resetting leverage on an every single day basis. That's the focus, way less than having any kind of distributions. I don't. What I struggle with sometimes, especially with leveraged products that pay off frequent dividends, it almost hides the fact that it should be seen as a day trading product and not some kind of yield play.
Yeah, exactly. Okay, cool. No love for Intel here. Will Intel stay in the index? It looks like it's in AIPI and FEPI.
Yeah. So I mean, specifically for FEPI. It's basically the top 15 names, and it does look to reconstitute on a quarterly basis. So rebalance monthly, reconstitute on a quarterly basis. So if it falls out of that top 15, you could expect it to get replaced at some point.
Yeah. Okay. Rex Rocks.
The short Jim Cramer product, I believe, was shut down.
Oh, was it?
Yeah.
Oh, wow. Here's that. I'm just pulling up comments as I get to the next question. All right. So here's a good question. Are FEPI and AIPI? I call it AP, by the way. I don't know what you call it, but
AIPI. I mean, I want to give it its AI shout out. So I always say
that's true. Yeah. It's just easier to say. It's like it slows you down. FEPI, AIPI. Are they approved to do any other options such as puts, call spreads, etc.? Right now, they only do covered calls.
Yeah, we have some options in there as far as using like flex options. But again, our goal is to focus on this being like a traditional covered call strategy. We want to own the stocks outright, and we want to sell calls on those names. And we're not looking to hedge the downside on it or limit the upside. From a call spread perspective, not from just a straight call spread.
Okay, and no plans on changing it, right?
No, I think the best thing you can do is try to be as consistent as possible with a product like this.
Okay,
in my opinion.
Yeah, I believe you kind of mentioned that this before. Does FEPI have capital preservation or appreciation as an investment goal?
Yeah, I mean, we're trying to balance the two portions of these covered call products, right? We want to provide the most upside we could possibly provide, especially compared to like other traditional covered call strategies, while at the same time having an above average yield. So it's something we balance every single month.
Awesome. AI pie, I guess that's another way to say it.
Okay.
Right?
That's not bad.
You get the AI in there, right?
Absolutely.
All right. Here we go. Taxes. So your website for FEPI and AIPI, most of the months I'll say come up return of capital, right? And my thought on that is obviously ideally you're not selling the underlying. You're buying the underlying. Yes, there's reallocation, but you're not taking the capital gains essentially on the underlying. So the only settlements are essentially the covered call settlements, right? So are you
do keep in mind there, every month there is a rebalance to the index. So there is going to be stock trading every single month. And, if the stock does run off, its percentage of the overall piece is going to, rally with it. And then we're going to have to slice that back.
Yeah. So at that point, you'll be taking capital gains, but there's a lot of times where you are capped and you're paying out the losses on the covered calls, right? So that's how you're able to classify things as return of capital, correct?
Yeah. And then I'm sure this is leading to, basically, because it was a new fund, the tax advice we received was that, we have to report the classification of taxes every single month. But then we couldn't really get a tax opinion until we had our fund out there for a year. So that's why we kept saying, hey, it's flagged as return of capital, but this can change once we go through our first tax year end, which was June 30. And that's when it became officially classified as ordinary.
Okay. Yeah, and those are
not dissimilar from other the traditional ETFs, traditional covered call ETFs. There's no real way to there's no real way to kind of avoid some of the inevitable when it comes to these strategies on the taxes.
Okay. And those are just estimates anyway, right? You don't know to the end of the fiscal year what's truly classified as return of capital. Okay. Back to the name pronunciation, AIPI is apparently too nerdy. This guy keeps asking about.
So the PI, the EPI, that's equity premium income. So for FANG was easy, right? FANG equity premium income, and then AIPI was like, well,
doesn't roll.
EPI would be a little weird. We want to make sure we give the shout out to AI, so we said, all right, AI premium income.
All right. Yeah, you already answered this. Obviously, you're sticking to the covered call strategies, but since this is coming up, is there anything in the mix of the future? Anything filed? I think I saw a crypto one that you filed for. Is that correct? And outside of that, what else do you have that you could speak of?
Yeah, with products that are live in the market, generally speaking, we don't really comment on it. But if you do look at our filings, you would see one that the stocks will be part of a crypto equity basket. I think we made the ticker public in that. It's
that's right, CEPI.
CEPI, yeah. So we're looking forward to getting that launched. I think the world of crypto is pretty interesting. It seems like, regardless of your political affiliation, Trump certainly seems bullish the crypto industry, and the other party, Kamala, seems very open to the crypto industry. So I think the hope is once this current administration is over, maybe Gensler, steps aside, and there's just a more friendly crypto environment coming out of either party.
Yeah, the market seems to think that's going to happen, right? Today was all week it's been booming.
Yeah.
But so is that a basket? Is that going to be a basket of crypto funds, or is that going to be one crypto fund? Like
no, it's going to look similar to like a FEPI or an AIPI. It's going to hold a basket of crypto related equities. Yeah.
Okay. Any of yours? I don't know if you have any actually. But do you have any crypto leverage?
We have some crypto funds. We were the first to launch 2x and minus 2x spot Bitcoin ETFs. So the underlying is IBIT. So what's cool about that a little separate than this, but what's cool about that is that the existing levered and inverse Bitcoin products out there are used futures, either partially or fully. And when you start using futures, you start introducing the contango. And the contango bleed in crypto is very real. You can look no further than comparing like BitO versus IBIT, and you see a pretty decent outperformance by IBIT because it holds physical crypto versus rolling futures. But back to the SEPI, I feel like, by the way, also some people say KEPI because it should be more like a crypto. No. I struggle with that, so I say SEPI until we have a SEPI product, I guess. It's gonna look and feel kind of similar to what you're seeing from a FEPI or AIPI. It's gonna hold those kind of related stocks and look to sell volatility on those names. You could probably just by using a napkin or just generally thinking, kind of figure out that those kind of equities have some good volatility to them as well. And then we would look to hold them within, again, like a traditional covered call strategy.
You should put BTCL and MSTU in there, right?
That would be a whole nother game. Yeah.
Get some double dipping, right?
Yeah.
So here's a question I've always had, because I know, FEPI came out and you haven't really nothing really launched until AIPI. And I was surprised because AIPI kind of an overlap, right? Tech sector, obviously plus AI. Is there any plans to look into other sectors? I know other sectors don't have the same IV, which makes it more exciting. But any other plans outside of the crypto one that you could speak of?
Yeah. I think we're I think we're enjoying the traditional covered call space. So if you or any of your followers have any specific ideas, we're constantly looking at product. We're kind of constantly trying to be a little bit different. Where are people, what are people looking at? What should they be thinking about? Not just right now, but what does the future look like? Where should we be next year, the year after that? What kind of product's going to solve problems, or completely different that haven't been done before? So we're constantly looking at that, and we're, if people are happy to type into the comments, areas that they think are interesting, happy to review them all if we haven't already. But yes, we fully plan on expanding our covered call lineup.
Okay, cool. So yeah, I guess for the viewers, if you're interested in other sectors or other funds, feel free to type it. Obviously, we could take a look and go from there. But there is nothing, I guess, filed or already in the works outside of the crypto one.
Okay. Nothing else we filed for as of 5 o'clock today.
Okay. We had that. And also, congrats. I saw N-Flu. That's another one, right? N-Flu.
Sure.
The Netflix double.
I like that. Yeah.
Yeah. So that one, just in time, right, for the season. So we can get that one, out and about. AMC.
Nice.
Would you dare? Actually, that would be a funny one to call it the like a diamond hand or something interesting. I know that would be insanely risky to have funds like this, but AMC, GME, Bed Bath, I don't know.
So, all right, I'll give you a little inside baseball. So for the MicroStrategy product, 2X MSTU, we did sit around for a little while thinking about should we go for a memorable ticker? So we looked up Mike, Sailor, spelled it different ways. And sometimes trying to come up with the tickers is some of the best part. But then kind of we just default to what do people like? Was it easily understood to be? So like MSTU, and FEPI was an easy one for Fang, Epi, kind of a playoff of a little bit of a playoff of Jeppy or F Jeppy, however you want to consider it.
Yeah, the tickers are always important. How about an inverse? I think he's talking about MSTU and MSTR.
Yeah, we do have that. So for the inverse
MSTs, okay, you do MSTZ.
Yeah, MSTZ, which traded pretty actively today for us. MSTZ is the inverse MicroStrategy.
Okay, so you have it. You don't have it on Apple, Google, Microsoft, or Netflix yet.
That's right.
Okay. Any plans to, or is it the interest?
We filed for it. We could go for it. As soon as we feel like it makes sense from a market point of view.
See, meme stocks, right? You can come up with a meme ticker. You can throw AMC, GME all in there, right? And even a DJT you could throw in there, maybe. I don't know. That IV was it's over 200%. I don't know if you saw.
I didn't know. I guess I can't be surprised.
Yeah, financials, commodities, metals. Yeah, there's a gold one. Gold seems to do pretty decent. Another inverse. I'm not sure what he's referencing. All right, so here we go. What do you think about day trading?
I love day trading. So I have basically part of my portfolio is long-term, right? I want to retire one day. But I definitely have the most fun with a good chunk of my portfolio that I actively trade. I've traded all of these things historically. I worked at a big bank for a little while, and I on a commodity desk, and I would trade the old 3x nat gas and 3x crude oil ETFs or ETNs when I would have a position. But the funny thing is, or painful part is, When you work at a big bank like that, everything you buy, you have like a 15-day hold period. So I would watch like meteorological reports come in if I was long or short nat gas, and I have to hold it for 15 days. And I'm looking at the forecast, and I'm like, all right, I think I'm good for 15 days. I like it. Let's go. So yeah, I'm very, very much interested in trading. I mean, I think that's, I think most of the guys here, we're trying to create products that, that we want to trade as well. So if it hasn't been done, or, we feel like we could do it with more leverage, we're actively pursuing that by all costs.
Yeah. Okay. So I assume you love options as well, to follow up on that question. You love day trading and options trading.
Yes. I do prefer everything in an ETF wrapper. I don't trade as much options, although I would say during COVID, I traded almost absolutely everything. When I was sitting at home and I don't know, just with a little extra time on my hands, staring at the market, not being in the office, chatting with the guys, I found myself trading a ton, and I found myself trading absolutely everything.
Yeah. It's a good time too.
Yeah.
So I just kind of asked you the first question, but do you have any favorite tickers or strategies when it comes to options trading?
No. So I don't know. I end up reading a ton about what's going on in the world and in the market. I do a little bit of technical analysis, and kind of, when I see two things kind of jive together, like a larger story that I see happening, whether it's from reading whatever, one of my 10 newsletters that I read every morning, the journal, whatever it is, or what's going on TV. And then I look at what's going on the tech side. Maybe I'll do some options trading around that. I don't necessarily have favorite tickers, but it depends on what's going on in the world. And, if there's something interesting in the gold mining sector, I'm in. If there's something going on in a foreign security, I'm in. If there's something going on that might be better suited for an ETF, then I'm in. So I don't necessarily have a favorite strategy. I look at a bunch of different asset classes, fixed income, commodities, and equities.
Do you use the wheel strategy?
I do not, no.
You're not, okay. How old were you when you started? I assume in the investment world.
All right. So I grew up in a pretty blue collar town called Milford, Connecticut. My very first stock purchase was, do you remember the starter jackets? Remember like the starter?
Yeah.
Company?
Oh yeah. Yeah.
There was a starter outlet like 10 minutes, 15 minutes from my house, and they would have like the stuff that had like the misprints on them. So like I remember my brother had a Kareem Abdul-Jabbar jersey, but it had like a misspelling on the last name. But it was still like the greatest. Yeah, exactly. It's like the greatest place in the world. I'm like, these things are the best. And I found out, I think I bought like 5 shares at like $5, and I bought it from like a brokerage account from my bank, or maybe it was something it was like $100 or something like that. And then within a year, the company went bust. So my first trade was really bad. And I couldn't have been more wrong about not doing more research other than how cool jackets are. But as far as getting started on Wall Street, I got started about age of 25.
Nice. Yeah, it's funny. I always wanted the pullover starter jacket. I never got it though.
Oh, those are sweet. Yeah.
Yeah, exactly. I guess they were too expensive then. I don't know. But yeah, that's funny. Healthcare. So that's another option for, I guess, a sector ETF. Okay. Oh, maybe when he said inverse, he's talking about an inverse FEPI, inverse AIPI. Ticker symbol AIOLI.
Aioli? That's pretty good. I would say there's no real plans. There's no real plans to do an inverse fund like that.
Okay. All right. So overall, I mean, the funds, I think the T-Rex that you guys have in your name, I think, that could be like you should get like a T-Rex logo going, on your next.
We go back and forth on that. We go back and forth on that. Yeah. I feel like, like a softer version of some kind of like mean dinosaur.
Yeah. I have look at one of my thumbnails. I have like the perfect dinosaur for it. And I throw it every time I review your funds. I throw that dinosaur on there. I just think it's like, I don't know. It's a perfect, I love that it's called T-Rex, but kind of sticks out?
That's the goal. When you're not, the big guys, BlackRock or these other guys, you got to try to figure out some interesting situations to position yourself.
Yeah, exactly. So yeah, it's not easy out there to compete, right? But you're kind of I feel like you guys are in a field of your own, right? You're not in the high yield space. You're in the higher yield space. So,
Yeah.
like I said, you're above the YLDs, right? You're
Yeah.
better than them yield wise, and probably I don't know performance. I didn't check, but and then as far as like yield max defiance and even Roundhill, they shoot for like 40%, 30%. Although one of yours is 30%, but your strategy is kind of essentially standalone. So are you planning on maybe future funds just sticking to that strategy, or are you ever going to consider maybe doing daily options and get into that space? Because daily options and weekly payouts now, that's a big conversation. It's a big thing now in the yield space. So I'm not sure how far you want to go into different options, or are you going to stick to what kind of has been working for you?
Yeah, I mean, we're opportunistic, but again, I think we really want products that we would want to buy and hold ourselves when we're talking about the covered call space. So I break down, even when we're charting, how the overall covered call industry is doing, we break it down by traditional covered calls, the ones that, the JEPIs of the world, the QALDs, us, hold the underlyings. And these are the ones that, financial advisors, a lot of brokerages will allow on their platforms as portfolio solutions. And then the synthetics, there's just like a lot more volatility in a lot of the synthetics, especially when you're looking at like single stock versions. So I'm not at all against launching new lines of covered call products that might not be deemed traditional. We kind of look at all markets all the time. I would be surprised if we didn't have products that were outside of just the straight, like what we're doing now.
Yeah.
I'm sure we'll have some ideas that will be interesting for you guys.
So I guess you guys, 25%, 34%, that's what you were interested in and striving for. So is that, your strategy now selling the covered calls on those options, do you strive for, a particular annualized yield? Do you strive to yield what the IV of that underlying is? Like when you're selling these covered calls, what makes you decide, like if earnings is coming up, for example, before the next expiration date, are you going a little further out based on that? Or, is there any strategy here?
Yeah, we could. Again, if we're trading around earnings, there's going to be probably a higher volatility in that shorter dated option stream. And we are still trying to juggle, out of the moneyness and income. So that doesn't stop where the volatility is, but it's almost like, some kind of parameter that's both going up at the same time. So we don't really try to trade around, a specific event. We're trying to be as systematic and kind of programmatic as possible and reliable as possible with the strategy and with what the fund is doing.
Yeah. Would you say Tesla's the hardest one to judge or predict?
Tesla's, I would say, definitely the most interesting one. I mean, he could send out a couple of tweets and it could cause the stock, to start mooning or crater or Tesla's always an interesting one.
I always say that has like unappreciated IV. Like their IV is much lower than what it should be, in my opinion.
But I do not disagree.
So again, here's the topic again. It sounds like you're not against it, but you're up for pretty much anything in the future.
Weekly paying funds. Yeah. I mean, again, I think the whole goal of FEPI was to provide a better traditional covered call strategy. And when we're thinking about it from that lens, it was very much, monthly versus monthlies. I do see the world kind of pivoting to weekly. I understand why people would want to get paid on a weekly basis. It feels good. It's like old school paychecks, and you don't have to wait till the 1st and 15th or once a month. Totally understood. I think that feedback's given. I think, you're starting to see some of those funds grow. So I wouldn't be surprised to see whether it's our funds or future funds look to go on a weekly basis.
Exactly. And you mentioned old school. It is, to me, I'm like, who gets paid weekly anymore anyway? So it's funny because the
Yeah,
demand is for weekly. I get paid bi-weekly. I haven't got paid weekly, 20 years ago maybe, but
yeah, probably the same for me.
yeah. So it's not like I'm used to getting weekly paychecks, but I get it. People want to get paid more so they don't have to worry about budgeting as much, maybe because some people get paid monthly paycheck, and that's rough.
Yeah.
Does Rex stand for anything?
So Rex is Latin for king. Our founder is Greg King.
Okay, there you go. Did not know that. Fun fact of the day. Weekly pay is good too. Okay.
So when your audience is talking about inverse FEPI or inverse AIPI, are you thinking like selling puts or just inverse what's currently happening on the fund?
Yeah, well, I guess pretty much what you just stated. I guess selling puts, but it depends. I guess the complete opposite, because I know you just sell covered calls, because I know some of the other funds, when I think of Yield Max, their inverse does the opposite for their synthetic position.
Yep.
And then instead of selling calls, they're selling puts weekly, right?
Yep.
So I guess for yours, selling puts monthly again, but
Yeah.
maybe they can clarify what they would expect out of an inverse fund. I personally, I don't touch those. I don't want to short the market,
Yeah.
Yeah.
I mean, long-term history suggests it's not the greatest move.
Exactly. Yeah. I know we kind of beat this dead horse, but again, they're asking any plans.
Always. We're always looking to do new products. I think we've launched, I don't know, 9 or 10 so far this year, which is, I think, pretty good. We're hoping to get a couple more out for the end of the year.
Yeah, you have a lot of leverage funds.
Yes.
So that's, I guess, your bread and butter. The covered call ETF section.
We love trading.
Yeah, I could tell. But we love high yield here, so you got to.
Absolutely. And we're solving for that too. Yeah.
We got to get like at least 2 or 3 more coming out. Here's some sectors: healthcare, financial, are underserved in the
Very fair.
Yeah, healthcare would be interesting. I'm not sure on the volatility on those, but it would be pretty cool. I know like Moderna's not doing that great, but I don't know. It'd be a tough one. But again, people, if they have the option to choose different covered call sector ETFs, I think that'd be pretty cool. Is there such thing as an inverse on a basket of stocks?
Absolutely. So we're talking a lot about our T-Rex brand of ETFs, which is single stock, levered and inverse. But most of the rest of the inverse and levered market is on indices, is on smaller baskets of stocks. Our microsectors brand has inverse FANG, inverse gold miners, and then obviously Direxion ProShares have a number of other products out there as well that go inverse.
Yeah. Okay. And we kind of talked about this too. Dividends on leveraged funds. You said it's not really the primary goal, but you have a lot of leveraged funds out there. Have any of them paid distributions?
Only forced capital distributions at the end of the year. Nothing programmatic, nothing monthly or anything along those lines.
Okay, so if they are paid, it's typically just at the end of the year, once a year.
That's right.
Yeah.
That's right.
Okay. Because I know some of them, like TSLL, for example, that's a double leveraged Tesla. They pay like a quarterly distribution. I don't know how they determine that, but okay. Any Bitcoin funds that will pay 100% yield? Well, any idea what this SEPI will yield?
Nothing I could really talk about publicly right now.
Okay. I'm going to guess it's higher than AIPI or AIPI.
I would say, broadly speaking, I think crypto stocks are a little more volatile than some AI stocks or big tech FANG stocks.
Okay. Can you talk more about how you decide what to launch covered call strategies on? I guess, I don't know. How do you How do you decide? I know you said you kind of launch what you guys are interested in buying yourselves, but do you get feedback from the community? Do people email you? Do they?
Yeah, I mean, there's a ton that goes into creating a product. So one, we want to figure out, are we alone in being interested in this? So we will talk to the larger community. We will talk to market makers. We'll talk to other, parties involved in the creation of these products, like index people. We want to talk to our traders and let them do like a liquidity screening. Make sure, hey, if we want to launch, I don't know, XYZ covered call ETF, we need to make sure each stock in that basket, or that stock, if it's a single stock product, is deep enough from a liquidity perspective on options. So a ton goes into launching these products, but it does start with like general interest level, for FANG or big tech. I mean, there's a lot of covered call products related to the NASDAQ 100. And, what we're trying to solve for there is just, the lack of upside it provides, and really lack of income it provides too. So that's how we thought like FANG would be like almost like our first test case. Like, well, if this works, then yeah, we can look at it for other sectors that are interesting. And, a thing like AI, it's like, okay, I want the upside of AI. I believe in it long-term. Maybe I'll cap some of my upside, but I want to get some yield across the way because it is an emerging field, and I could harvest some of that volatility.
Okay. Thank you. Since you guys obviously adapt in the AI sector, has there any been thought of a nuclear uranium fund? Lots of chatter about that.
There is lots of chatter about that. There's a number of these products already in the marketplace. It was like Sprout has like I think they even have like a physical or a futures-based fund. It's something I kind of loosely follow from a personal standpoint. And it's kind of thing that it's already been done several times over. Chances are we won't look to kind of enter that space. It stops being interesting from like an issuer perspective. Like if your, deviation, like I said before, from like a large cap perspective, if our deviations that we're going to launch the S&P 499 fund, it's not that great. It's probably not worth pursuing.
Yeah. Okay. I guess he's predicting 45%. I don't know.
We'll see.
This is in reference to.
I know what it's in reference to.
Okay. So how did you get that?
Yeah. I mean, let's see here. How do we figure it out?
Got some poll?
I would say, I mentioned this before as well. We started looking at the single stock space right away. I wasn't sure how big the market would actually get and how big the interest would get. We had this microsector business that was like smaller sectors already, like big tech. We had that. We had a Fang and Friends basket. If you want to trade isolated big tech, we had those products versus like the more broader based NASDAQ 100. So I was a little dubious on what would happen with the single stock space. So we were definitely late. But then you just started seeing the products get launched. It was like 1.25 Tesla, 1.5 Tesla. And once we go all in on something, like, we're not leaving our desks, we're working around the clock, we're staying in the weekends, we're going to try to figure something out. So we figured out how to get 2x NVIDIA, 2x Tesla, which was an absolute, win for us as a firm to kind of put that T-Rex brand on the map. So, we're not doing anything different than anybody else, but we're kind of cracking the code on some interesting things, fully within the rules of the ETFs by the SEC and listing requirements. I will refuse to call it that we're lucky. It's just it's a lot of hard work.
Well, like, I'm assuming they filed for 2x. They didn't get it. Right, but they got 1.6.
They filed for 1.75.
Yeah,
I believe they might have filed for 1.5 or 1.75. They didn't file for 2x.
So maybe that eased the way for you to get the 2x. Nope. I don't know, but MSTR.
We filed completely for 2x and got it.
Got it. Yeah, good job. I mean, why launch if you? I mean, that's easy, right? MSTR.
Yeah, I mean, I think there's an audience for both. I think You know, some people would say MicroStrategy is almost like a levered Bitcoin play, almost like a small like gold miner is to gold or something, right?
Yeah.
So again, we want to put tools in people's toolkits. I think it's interesting to trade. If I'm looking to trade upside in Bitcoin, yeah, I might take a portion of that, put it to the MicroStrategy, and a portion of that to Bitcoin.
Okay, this one talks about having an energy, especially solar, covered call option. I don't know if there'd be enough stocks there. I assume so, but or how much interest there would be in that actually. Ever thought about an SFOL like fund? Lots of folks, including me, love that fund, but there's probably room for a little competition.
So all right. So history of Rex time. History of Rex. We get our first products out in 2016. The very first 4 products we had out, the first 2 were gold related, gold hedged S&P and gold hedged FTSE Russell. The other 2 were a short VIX product and a long VIX product. And how they differentiated themselves was that they focused on weekly VIX future options. So what that did, if you think about how, VIX moves, let's say on TV, the daily VIX move is 10%. The shorter duration of your portfolio of futures, the closer to like spot to day 0 you are, right? So if I'm trading a 1 week out weekly VIX future, I would say, okay, my duration is 7 days, but what's moving right now is spot, that's day 0. And then, but the average for these typical products that have been out there are like a month and a half. So our product, our duration was maybe like averaged around 20, 25 days, if I could remember correctly. So we just moved more. We were closer to spot. So it was a really great strategy. It was hard because the weekly VIX futures never really took off. So there wasn't a ton of liquidity there. So we traded some monthlies and some weeklies. So I'm very familiar with the long and short VIX ETF world. Yeah, I mean, it's something I kind of look at sometimes as well from like a trading perspective. I do think there could probably be some better stuff out there than what's currently there.
Okay. Cool. All right, so here comes, we kind of talked about this earlier too. Ideas on a 25 to 30% yielding 0 DTE fund. It's a big 0 DTE is a big fad now, right? Everyone's coming out with that. So what do you think of 0 DTE on, well, it's just really the indexes that we could do it.
Yeah, I mean, in general, sure. I have no problem with more products being in the marketplace. I think it's safe to say they haven't, stood the test of time yet. They're definitely more in what I refer to like more as like the synthetic exposure, because they're, synthetically long via options and then trading the 0 DTEs. Yeah, not against them. We haven't launched a product on them. Again, like you mentioned, there's, it's pretty limited as far as what's being offered in the marketplace. NASDAQ, S&P, it's pretty limited just onto the broad indices. But yeah, we're keeping an eye on that market.
What speaking of that, what is it limited to? Is it really just those indexes? I mean,
right now,
how can you get more options to do daily? You
need to you need to talk to some of the exchanges about bringing them forward. There was an article in the Journal a couple of weeks ago about 0 dates possibly on stocks like Nvidia and Tesla.
Yeah.
We'll see if that happens, but that's where things can get certainly interesting.
Yeah, break the system, but there's
it might not be great overall. Like there's going to be one of those like vol apocalypses days. If you remember where VIX went through the roof, that ended up like crushing our short VIX product. I wouldn't be surprised if something happens to these shorter dated products.
Yeah, these funds, what they're doing, your funds and the other funds, they're at least bringing out the word of options. What options trading is, because most people, the average investor, most people don't really care about investing, and the people that are called investors, they don't know anything about options, right? So I think at least these are bringing out, okay, well, how are they paying this, right? And it's like, oh, options. What's options? And I think that's the good part about all of these funds in general. it's at least getting the word out. But now getting people to learn and understand options, that's another story. I kind of asked these to the other fund managers too. Like, is there anything that you guys can provide on an educational level for beginners to, I know that's not really your space, but how do you get the average investor to learn about options, or, it's like a secret. I feel like no one.
Yeah, it shouldn't be. It's almost like one of those things that like needs to be like demystified. Options are great if you know what you're doing, and there's I think it's SIBO has like the Options Institute that they're affiliated with, and there's a ton of great information there. We put out a bunch of information on the education basis, whether it's like trading levered and inverse products, which you also need to know what you're doing before you enter, and how ETFs work, how options work. Education's a big piece of it. It's like, but at the same time, we're not there sitting next to a person knowing what they buy or sell. And that could be, a variable annuity that has 10 points of, fees baked in for the insurance salesman. It could be a levered product or an options product. So a lot of this ends up sitting with the brokerage. And I could tell you for like a Fidelity, they have an absolute ton of information on options trading, how things work. You can put test trades in. You can trade your iron condors. They spell it all out for you. It's pretty cool.
Yeah. Okay. Yeah, it's because a lot of people ask me, right? Can you do videos on options and things like that? But I know obviously YouTube is a place for everything, right? You can find anything. Yeah. But sometimes it's better to hear it. Everyone learns their own way. Things have to be taught a certain way. I always say, like, I don't use the Greeks. I don't speak Greek. I don't do that. I keep it so simple, and that's like, kind of my crowd enjoys that. But anyway, we're at almost the hour mark. We're at 56 minutes. So I wanted to leave some time for you to see if you have any questions for the community. And then, obviously I could pull up responses, or you could check out the responses later. But, overall, is there anything that you're interested in what the community thinks about, or did you have any?
Yeah. All right. So, I know how I use covered call ETFs, and, a lot of it was, like I mentioned, there's like a lot of fixed income volatilities. A lot of fixed income volatility that was that kind of brought a lot of attention to these defined outcome kind of products, or defined income kind of products. I'm curious how different people weight a product like this. How do they, do they have a core, whatever you want to say, a 60-40 portfolio, some kind of core longer term portfolio, and then they add like a couple percent of this? Is it a bigger holding than that because they're capping their upside? I would love to know how people allocate to, I would say, traditional covered call products. I know some of the synthetic covered call products have, some volatility that's, a lot. So I would hope that people aren't going all in on something like that. But I would love to know, weighting, how they fit it in their portfolios, and anything else ETFs, just in general. I love ETFs. I'm happy to be part of it. Like I mentioned about my career, I started off kind of helping asset managers launch products. So now being on the product side, I think it's awesome. I love it, and I look forward to work every single day.
Okay, yeah. So for the community, I mean, what's your weighting essentially on FEPI and AIPI as part of your portfolio? Looks like this person's 20% between both. 1/3 of my fixed income portion of my portfolio is in high yield funds overall, so 10 to 15%. Yeah, I mean, I have an account where I do options and high yielders. FEPI is about like 10% on that. Because their margin maintenance is lower too, which helps. So actually, one more question on that. You probably don't. Well, maybe So, like brokerages like Schwab, FEPI 30% margin maintenance. AIPI, I mean, it's been around a few months now. 100% margin maintenance. Like, what goes into the thinking of that? I mean, it's just because they're new under a year. Like, do they just do that automatically under 6 months?
Yeah, I mean, I can't totally speak to how the brokerages treat that. I have no idea. Probably some kind of new fund thing. Maybe it needs to hit certain. In addition to the volatility of the fund, they're probably looking at the assets of the fund. because there's always like fund closure risk. If you have like a fund that's just sitting around that nobody trades, do they even want to bother putting margin on it? Or if they do, they might as well try to make as much revenue as possible to deal with the hassle of locating it.
Yeah, that's a good point. I'm wondering if there's like a, assets under management minimum that has to be before they consider that.
There might be. And AIPI just crossed 50 million recently. So hopefully that helps.
Maybe that's it. Right. Actually, it may. I thought I saw someone did say it did get adjusted. I'm not sure, but I know it's been 100% for a while, at least on Schwab. But then there's like Robinhood. Robinhood's low on everything. But did you have any other questions that you wanted to ask the community before we go?
No, I check in on you quite often, as you guys know, or a bunch of people. I think I've saw Scott McKenna's name a couple times in the comments here. I work closely with Scotty. We definitely review a ton of these videos. We love this audience. We appreciate people, trusting us, right? Like I'm literally trying to create products that my parents invest in. So, seeing it grow and seeing people talk about it and proudly wearing FEPI swag is super meaningful to me. So I thank you, and I thank your audience for all the attention and love.
Yeah. Shout out to Scott McKenna, AKA Little Scott. I'm sure he loves
Yes,
but
Little Scotty.
No, he's awesome, man. And people love the FEPI merchandise. Keep that coming. Get a T-Rex on there.
Absolutely. We got to figure out the character for T-Rex if we go full blown dinosaur or not.
Yeah, exactly. Like I said, check out the one on my thumbnail, obviously, or you can come up with something a little more creative. But yeah, no, I appreciate your time, Scott.
Happy to be here.
Happy to finally get you on, which is awesome, and I'm sure the community is very grateful as well. And hopefully,
thanks everybody. Yeah, if anybody's not following us, we're on Twitter at RecShares. You can also go to RecShares.com, sign up for emails. We email out our distribution rates. We email out new products, and we're pretty much always available. So thank you, everybody.
Okay, and Scott, if you don't mind hanging on, I'm just going to end the live stream here, and then we'll go from there. Again, thank you, community, for your questions today. It was a blast. All right, take care.